Hello and welcome to Big Deal. Now remember, tax is a very important component for decision making, whether it's investments, transactions, or usual course of business operations. Now, while India looks to FDI to fuel its growth, tax certainty is the biggest ask of the foreign investors. To discuss all the aspects of India's tax regime in 2020, we have an eminent panel of experts. Let's welcome Senior Advocate Porus Kaka, Dinesh Kanabar of Dhruva Advisors, and from the corporate side is Amit Gupta of Dell Technologies. Gentlemen, so good to have you on CNBC TV 18. Dinesh Kanabar, starting with you, do you think that this year the government has made many efforts to really change from tax terrorism to tax by consensus?
That's a very interesting question, Nisha. Right at the beginning of the year, the pandemic had just set in. And I don't know whether very many people will recollect, but a group of officers got together and actually prepared a submission to the Ministry of Finance, asking them, saying that because of COVID, tax collections are going to be very poor. And therefore, what should be done to improve those collections? And they gave a slew of recommendations. There was this whole thing about bring inheritance tax, levy, wealth tax, you name it. Be tough on the taxpayers, etc., etc. And for a rare once, the government immediately took cognizance of this petition, which was actually in the social media, reprimanded the officers and set fears to LA to the fears to say that, no, we are not out here to really harass the taxpayers. So that's one very, very positive aspect. Again, clearly, because of the fact that India is seeing COVID as an opportunity to create an Atmanirbhar Bharat and is trying to get manufacturing out from China into India, it is trying to do everything and more to say that we do not want tax terrorism. Finally, we have not had tax assessments. The tax office is barely working. Faceless assessment has, of course, started. And we haven't seen orders which are adversarial in nature. In various interactions that we have had with the finance minister at a variety of forums, she has assured, and we have seen it in practice, that tax refunds are coming through. So we had more than 1,20,000 crores of refunds being issued. So all in all, rather than look at an adversarial tax regime, thus far, what we have seen is a non-adversarial tax regime. There are some negative spots, and I'm sure we'll talk about it, whether it is Equalisation levy, which was a new tax levied right in the middle of a pandemic, and the repercussions of that, TCS being levied, etc., much of which was relic from the budget. But otherwise, and yesterday I was watching CNBC News, and Shireen was talking to executive director of World Bank, who was rating India on some 34 odd indices. And on 2 indices, India fared better than average globally, one of which was tax, which was very heartening to note.
All right, so that's actually a big success and a victory for India to notch up in the tax level and the tax regime system globally. And thanks for pointing that out. But, the corporate view, and that's where the tax compliance issue, especially during the COVID times, could have been difficult. So, Amit Gupta, reflect on that, and also how difficult has the TCS regime been?
Yes, so it's been a mixed bag, Nisha. I would say that the positives have been the corporate tax rate cut, correct, which has been a great one. Dividend distribution tax abolition, great, helps cash repatriation, avoids any kind of double taxation where there were foreign tax credit issues. In terms of compliances, as I said, it's a mixed bag. Now, obviously, timelines have been extended, so that gives more time to the corporates to comply. However, TCS, which was brought in on goods, now implementing those, given the amounts that are collected versus the cost of compliances, the time taken for IT system changes, it's quite a challenge, correct? And also GST e-invoicing, great initiative, great thing, but implementing all of those, not easy. And overall, as I said, it's been a mixed bag.
That's right. We'll discuss more on that. But Porus, Kaka, times have been challenging even for the courts to run virtually, but we have managed to do that. So reflect on that. And also, do you think when it comes to taxation, because of the COVID-19 situation and the digital thrust that the overall world is seeing, digital taxation has been the key highlight for this year?
Yeah, I think the digital taxation is going to be the key highlight for the next 2 years internationally at least, because you find the countries falling on one side or the other. And primarily European Union, India, China, and many of the developing worlds are very clearly that they wish to tax the digital companies. United States is an outlier. So the Organization for Economic Cooperation and Development, OECD, has come up with two systems, they call them Pillar 1 and Pillar 2, to tax global companies and allocate a pie of that to those countries who have the market jurisdictions like India, like EU, etc., without the requirement of those companies to physically have offices or branches in India. This, whether it will be accepted or whether it will become a series of unilateral measures, is the most important thing to look out for in the next 2 years. India has already legislated. From 1st April 2020, our significant economic presence article will come into play in our domestic tax law, and we will seek to tax. But without amendment in the tax treaties, India will find it difficult to tax those located, for example, in USA. On the domestic framework, I think three significant highlights. And again, these get tied up into digital taxation. For example, the e-assessments. As Dinesh rightly mentioned right up front, it is a good move, but we haven't seen the orders. The orders are still to come, so let us await our judgment till then. Then there was the Vivad Se Vishwas scheme on the litigation to try and reduce. Just to give your viewers a perspective, this is the third, if not fourth, attempt to reduce Vivad Se Vishwas through schemes. 1998 was Kar Vivad, 2016 was International Domestic Disputes Attempts at Resolution, and now 2020. But again, as I said, it's there. But the only thing is that when you keep rewarding people who have litigated, etc., I'm not sure whether that's the right thing. Last thing, we will discuss this later, is the taxpayers' charter. The government has very wisely come out with a charter for taxpayers. It is still an intention without teeth, and I will discuss that later.
All right, so that's you've set the stage for many different topics that needs a proper discussion. And Dinesh Kanabar, you mentioned about especially Vivad Se Vishwas, which Porus Kaka was mentioning about. First, the efficacy of that, and when it comes to digital taxation, has India been extraterritorial in its rights to extract its pound of flesh?
So there are actually multiple facets to the question which you ask, Nisha. First is the Vivad Se Vishwas scheme has been a very good scheme. Unlike the schemes in the past, which ask you to settle at a lower than normal tax rate, here what you are told is you pay your normal tax, and if you settle a matter, you don't have to pay interest and penalty. And if you have won at certain appellate forums, then you pay half the tax if the tax office is in litigation. And as we looked at several people who came to us seeking advice, we found that Vivad Se Vishwas scheme is gaining popularity. We just have about a fortnight to go. 31st December is the last date. But that scheme has been quite successful, has been quite welcome, and I do hope it reduces the litigation. More important, when that litigation is reduced, Nisha, you find that people are able to get resolution to other disputes also faster, and you don't have to wait for a period of 5, 6, 7 years at each appellate level, which I think is very, very important. Sure. We then had another issue which was on the equalization levy, and the question was whether the equalization levy is extraterritorial or not. And the jury is, of course, still out on it. Equalization levy is a tax which is sort of an indirect tax levied under a direct tax regime. You do not get credit for it under tax treaties, etc. And the question is, under which article of the Constitution has it been put in the statute, and whether it can stand judicial scrutiny of being territorial or otherwise. As I said, the jury is out there. And then finally, of course, we had this arbitration award which has come in the context of Vodafone, where the Indian Supreme Court had upheld Vodafone's plea. There was a retrospective amendment, and the matter went into international arbitration as to whether this was contrary to bilateral investment agreement, and the arbitration award came in favor of Vodafone, and we are still awaiting as to whether India is going to challenge that at appellate forums or not.
That's right. That's actually one of the very big landmark events that has really happened in the tax regime of India. But Amit Gupta, I want to understand the kind of flip-flops we have seen in some of the cases in the tax regime in the past, like the newly created instrument of InvITs and REITs that we had seen in the last budget. And then there was some mechanism to change it as per the foreign investors' liking because they had baked in certain tax components before coming into the country, right? And apart from that, the Equalisation Levy, India being one of the pioneers in that. How does a global MNC firm like yours view India when it comes to tax disputes and tax certainty?
Yeah, so Nisha, tax certainty is definitely important, correct? It's very, when you invest in a country and in a business, you are looking for certainty. Now, there has to be a clear process. The laws have to be clear. The way you can do your business, putting in cash and taking out cash, all of that has to be clear enough. Now, one of the big avenues which has been there in terms of certainty when we look at it is APAs, Advanced Pricing Agreements, and we can talk about that. But in terms of equalization levy, there has been a lot of anxiety that got created, correct, in terms of, as Dinesh mentioned, there not being enough clarity also when it came in. And as an MNC, we were a bit worried when it came in terms of interpreting it and looking at it. How does it impact our business, our supply chain models, and all of it? And also it needs amendment, correct, to some extent, because the way the law is worded, actually it can apply both the income tax as well as equalization levy can apply up until April 1st, 2021, which requires an amendment.
That's right. So there are many litigations and many issues, and we'll deep dive into some of them right after this short break. Gentlemen, hold on to your thoughts. Stay tuned to CNBC TV 18. Welcome back. We are discussing the tax regime of India in 2020 and way forward. Porus, Kaka, Amit Gupta, before we slipped into this break, was talking about the transfer pricing and how certain aspects have been dealt very successfully now by the government. But how has this particular area been in COVID situations?
So I think transfer pricing is going to have a unique sense of challenges during the COVID pandemic. And there are two parts that I would break it up into. First is, as you're aware, the entire basis of transfer pricing is to find yourself someone comparable and see that your profits are benchmarked to that person's profits. And here you're going to have significant work for the industry to find a comparable, because, for example, take even the hospitality industry in India. Each state has its own rules. So, for example, a hotel in Maharashtra, which was not allowed to open till much later, could not be compared to a hotel in Delhi. So they are going to have significant challenges when they do their audit reports next year. The second challenge is on advanced pricing agreements. This is where profits are locked in by agreement with the CBDT. The question is, if you have agreed to a margin which is just not sustainable due to the pandemic, what will the CBDT do? What will the world do? And I think that will be a significant challenges for transfer pricing during this year.
Amit Gupta, you have any suggestions on this aspect? You did mention that advance pricing agreements has been very helpful and has given a relief. But in COVID-19, will they be helpful enough? What do you have to say?
Yeah, so again, so advanced pricing agreements, I believe, are really good. It helps give certainty. The issue with COVID-19 and the pandemic has been that there has been delay in getting these APAs either renewed or the agreements getting processed. Or so the government would really need to think about investing more resources in making the APA program really effective and helpful, because the time taken can really be an issue. Also, in terms of the profitability point that Porus mentioned, definitely that will be a challenge. But the other way to look at it is also that when you say you are a limited risk entity or a limited risk constituent in an international transaction, to some extent, one would have to say you may have to continue with the existing margins which you may have agreed under an APA or the transfer pricing that you may have been following earlier, where you always said, I am limited risk.
That's right. And Dinesh Kanabar, while this could be an area of debate and may lead to several differences between the taxpayers as well as the tax authorities, what do you have to say about the bilateral treaty structure? Of course, also we have seen that money flows wherever there is a tax haven. We have seen in the case of Cayman, but there are many offshoots of this particular aspect where India has also restricted some FDI from Mauritius, and overall also we are working on multilateral instruments as far as BEPS is concerned.
A very, very interesting question, Nisha. So first, we have seen a situation today where any attempt to try and have double non-taxation is frowned upon. If you want to avail of benefits of a tax treaty, you got to prove substance in many cases. In other cases, you actually need to prove that the primary purpose for which you were set up in that jurisdiction was not taxes. So you have to pass the PPT test. Now, clearly one would have thought by now that Mauritius, Singapore, etc. would not be used as jurisdiction for the purpose of only availing tax benefits. And I was just watching the other day figures of FDI which came in, and again 42% of the FDI into India came through Mauritius, although for new investments there are no capital gains exemptions, etc. Also, we saw a variety of challenges. The famous ruling which came from the Authority for Advance Ruling in the case of one of the international investors, where treaty benefit was denied. And sometimes I wonder, I've been looking at India-Mauritius treaty controversy right from 1987-88, and primarily it sort of boomeranged somewhere in 1993-94 after Mauritius became an offshore jurisdiction. And we are still not able to find a resolution despite a Supreme Court judgment, despite a circular from the CBDT. And I think that's one issue which India needs to do to sort of put this thing behind, because if we are going to attract FDI, we got to make our positions on jurisdictions very, very clear. We cannot leave it for 10, 20 years for those resolutions to be found.
That's right. In fact, what has really made headlines internationally with respect to India and the foreign investors has been the several high-profile disputes. We've seen Vodafone case, Kane Energy case is still pending in the court of law. And you mentioned about the Tiger Global's aspect and the matter with respect to the Flipkart transaction. Given all this, from the legal point of view, Porus Kaka, where do you see this heading? And this definitely needs a resolution for India to attract more FDI.
Well, I'm slightly sorry to disappoint you, but I don't think we have found a resolution since 2001, and it's probably unlikely that we are going. This is a story of 2 steps forwards, 1 step back. So despite the courts, from the Supreme Court downward in Azadi, where the government and the investors were on one side, to the Punjab High Court in Serco, to the Bombay High Court in JSH, to the Delhi High Court, to the Andhra Pradesh High Court in Sanofi, all of them have respected treaties and given treaty protection where Mauritius is. But still we find decisions of the Authority for Advance Ruling, again, coming into issues of substance. So as I said, there are 2 steps forward, 1 step backward. This is going to take a resolution through the courts. And I think Mauritius has unfortunately become a difficult jurisdiction for them, because consistently, despite the judgments that we have, investments which are undoubtedly sort of treaty shopping or third-party investors which were allowed to come in through a government policy have not been given the benefits that was a part of the policy. Now, of course, the policy has been removed, the treaty exemption has gone away. So now they have to satisfy all the substance rules, etc. But anyway, there is no exemption. But for the past, that backlog will remain for some time to come, and until we clear it up and go through the court system again.
Very quickly, Porus Kaka, Taxpayers' Charter is a game changer according to you?
Oh yes, it's a wonderful thing, and I must congratulate. It's long overdue. It's slightly loosely defined. The point is also right now it's only an intention. It's under 119A of the Act. It's come into force. But the point is, what do you do if it's disrespected? It's an intention without teeth. So there are two ways forward, and I think both positive and hopeful. Let's end on this positive note. One is that the government gives its teeth and says that an assessment order contrary to the taxpayers' charter is not valid in law. But if the government doesn't do it, I certainly see that the courts will require them to follow the charter, which is now legislated upon.
All right, Porus Kaka, on that positive note, I'll have to thank all of you. There were many aspects to discuss, but litigations is the key. So many measures have been really taken by the government to bridge the trust deficit with the taxpayers, and many more are the ones which could be expected next year also, especially in the digital taxation framework as it develops across the world. As far as several litigations are concerned, well, the stance for now seems to be we can agree to disagree. Thanks so much for tuning in to Big Deal.